Hi, my name is Joseph Cordone. I'm with All Western Mortgage. I've been in the lending business for a little over 12 years. We offer every product that you can imagine, everything from home path to FHA, VA, and conventional. First-time home buyer should look at a few things. One, they want to make sure that they work with a lender that's credible, someone who's been in the business for a while. I always recommend that they get two good faith estimates from two different companies to make sure that they're getting the best deal possible for themselves. They can compare interest rates, they can compare closing costs, and just make sure that they're getting the same information for whatever product they're looking for. When you're looking for a lender, I always recommend you check with the mortgage lending division. Make sure that there's been no complaints against that loan officer or the company he's been working for. Make sure the company is reputable. You also want to ask certain questions like how long they've been in the business. Ask them about different terminology that you know and you hope that the loan officer would know. If he knows the terminology, that's definitely a good starting point. If he doesn't, that's definitely a red flag and you should be concerned and maybe want to talk to someone else with a different lender or a different company. A good faith estimate is a breakdown of your closing costs, fees that are associated with the loan, and also it'll give you a breakdown of your proposed payment and how much money you'll have to bring to closing. So it'll summarize everything that you're going to need to know so there's no surprises at closing. You'll be fully prepared to know what you need to bring in and what to expect as far as the financial terms are concerned. This rate, you want to deal with reputable companies, of course. That's my first recommendation. And I also recommend that you get at least two different comparisons from two different companies. This way you can make sure that you're getting the best deal possible out there. Our fees are very reasonable. We can match or beat any national bank. Every situation is different, but I can tell you that we will never lose out to a national competitor as far as fees or rates. 9 out of 10 times my rates will beat that of the national banks, the Bank of Americas, the Wells Fargos, the Chases. So given the opportunity, I believe I can always give my clients the best option for them. Points are costs associated with the loan. There's two different points. There's origination points and discount points. Origination goes to the originator/loan officer. Discount points are costs that are associated with the loan to buy down the interest rate or lower the interest rate depending on the type of product. So you want to know the difference between the two and always ask those questions when you meet with a lender if there's any points, and if so, how many points are associated with the loan. On the origination side, there should never be more than 1 point for origination. That's pretty standard in our industry. As far as discount points, unless you're buying down the interest rate, there shouldn't be any discount points. A VA loan is a government-insured loan for their veterans. If you served in any of the armed forces, the government allows you to buy a home with no money down, and there's no PMI. It's a great product for our veterans. So if you have that eligibility, I highly recommend that you use it. A conventional loan is a loan that's not insured by the government. Traditionally, they ask for a little bit more down and you need a higher FICO score. Where FHA, you can go down to as low as 580 or 600 with some companies. Conventional, depending on how much you're putting down, they're usually going to want a higher FICO score, traditionally above 680 in most cases. FHA is a government program. It was established by HUD. It was originally established to help low-income housing, but it pretty much pertains to all parties, no matter how much money you make. There's no income limitations or credit limitations. Someone who makes $120,000 a year with a 780 FICO score can qualify for FHA. Because it's insured by the government, you can traditionally get lower down payments and lower rates because there's less risk for the lenders. MIP is also known as PMI, just depending if it's conventional or FHA, and that is mortgage insurance on the loan. Anytime you don't put down 20% on your purchase, you have to have PMI. It's basically insurance for the lender in case you default. And the more you put down, traditionally the less the PMI is per month. Once again, my name is Joseph Cordone. I'm with All Western Mortgage. All Western Mortgage is the leader in mortgage banking and brokering here in Southern Nevada. We are the largest broker in the state of Nevada. We are associated and correspondent with 9 different banks, and we also broker with 30 other national lenders and banks. So any product out there, from HomePath to FHA to VA, we will have a product for you, and you'll be dealing with experienced loan officers.